Well, hello, guys. Hello and welcome and welcome and hello and hello and welcome and good morning and hello and good morning and greetings and salutations and good morning and welcome and indeed hello and welcome. Um, Let me say again, hello and welcome and good morning. Just a heartfelt good morning to you. Thank you for tuning in, ladies and Germans, to this special edition of Poco, Moss. And what brings you turds up so early, guys? It is 4:28 a.m. I got to the office at like 4:15 for you freaking turds. I don't know if I'm mentally ill or what is wrong with me, but I am extremely tired. What's up, guys? Thanks for joining me this morning. Um, Guys, there's only one way to say it: blowout, 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 blowout. Okay? While other companies are shrinking, while other executives are basically dying on the vine. They're not up to the challenge. They're just not man enough or woman enough to take on this economy, to take on this high interest rate environment. Anthony Noto, he was born for this moment, guys. He just proved that the growth story is not only intact, but that the business model is starting to work. That cross selling is there. That we're starting to see some of that organic growth. I have not had a chance, guys. I am barely awake. First of all, it's Latte Larry with you. Well, good morning. First caffeine of the day, of course. Literally brain dead, guys, until I have a little bit of coffee. But you guys are gonna carry us over here in the comments. I'm live streaming this thing for you. Um, let's take a look-see, guys. Let's have a look. Take a look. It's in a book, The Reading Rainbow, guys. This basically says it all. We're just came in just shy of 7 million members in so of course we're well past that point. Um, Products were up very nicely. 1 million product ads, over 1 million, 1.05 million product ads. And, again, I haven't really been able to read over this yet at all, but Galileo accounts up nicely to an all-time high. Very nice to see, especially when they're talking about adding bigger accounts. Hopefully, Noto and the team will have something to say about that. Guys, I am registered as an institutional investor and a qualified investor. You freaking turds! You guys wouldn't know what that is, but it means I get to get into big meetings with the big people because I invest big money for big important turds, much like ourselves. But anyway, guys, it looks like should be about 29 minutes till the earnings call. I'm going to try to go live. Um, my technical skills are that of a 90-year-old who's never seen the internet and never seen electricity. So we'll see how all that works. Who's here with us? Who's had the foresight, the courage, the chutzpah, if you will, to join us this morning? Who's up early? I guess it's really not that early. It's like for you turds, for you East Coasters, for you Easterds. It's like Easter, but Easterds. And so that's you folks who live on the East Coast. You don't have to get up at some ungodly hour. By the way, guys, if you couldn't figure it out by my sunny disposition and my polished, manicured good look. No, guys, seriously, I just got out of bed. I'm a little bit stuffed up. It was kind of cold last night, and I was at a birthday thing yesterday, not feeling extremely well, guys, but I'm soldiering on for you turds. For you guys who haven't seen the good news, it's just, I mean, I don't know how else to talk about this other than to say this is the growth that we want to see. I talked about Friday why I thought summer would look very, very good, and I think that's come to pass. Um, and I think Q4 is only going to be better. SoFi Stadium hitting on all cylinders, and this is where you start to reach the growth from, Last year or last quarter we had record member growth. Of course, you will recall. I mean, guys, I was told there would be no math, but that looks like 717,000 member ads. Is that right? I mean, guys, can somebody check my math? Does anybody have a slide rule or an abacus? What's up, guys? Somebody tell me something intelligent because literally my brain is dead. I have to make about 6 more lattes because I don't want to drink pure espresso because I haven't had anything to eat, and then my stomach will hurt, and then I'll be an even bigger, whinier Karen than usual. As Ray Liotta said, Karen, strokes away. Um, Yeah, I mean, guys, and they had a 3 cent loss. I think it was actually between 2 and 3 cents. I mean, the street had it at 8 cents. I think Noto was guiding for 7. I mean, I don't know what to tell you guys. I mean, where is the Chia Pet right now? Where is the Chia Pet? Guys, everything they said was going to come to pass by the end of the year, which was going to sink SoFi, it was all bullshit, guys. It was all complete bullshit. And it always was. It always was. Noto was never scared. I was never scared. Of course, I can trade this stock in my sleep. The only stock easier for me to make money on is like a piggy bank is Tesla, because those emotional turds and Karens are even more predictable than you turds and Karens, and even more emotional and even more proud. Oh, my stock. Guys, this is not, I don't know if you've ever seen the film Rounders. The character Kanish is like, it's incredible. He's like, yeah, David Redliner. That really rolls off the tongue. David Redliner? David Redliner, your table's ready. 717, absolutely. Thank you. Somebody out there, please check my math and all my facts and my logic and just my general, setup, because I have no idea what's going on, guys. Pasadena, all right, what's going on? I'm out here in the South Bay. Big DR. Doctor in the house. DR, what's up? Good morning, everybody. Hope everybody's doing very, very well. Again, I just want to digest this for a minute. We got about 25 minutes till the earnings call. Net interest income, 265 million, up 90% year over year. Um, I want to. What's the? Does this? I don't know if anybody's had a chance to read over this, but can anybody see what's going on with default rates? Um, I just guidance for the full year. Expect guidance. Yeah, so that's a nice little guidance raise, guys, and really strong EBITDA raise. That's just. I mean, they already raised last quarter, and they were on the high side of 343, and now they just adjusted to a high side of 396. Guys, I mean, these are like numbers you'd see in an absolute booming economy, and that's what I've been telling you guys. The narrative, I've been telling you guys this over and over and over till I'm blue in the face. The narrative is bullshit that high interest rates are going to put SoFi out of business with defaults. Like, they're making more money than ever in a high interest rate environment, and that's always been true of banks. And they don't, when they raise the SoFi customers rate 2% on the interest that they're getting, they're raising the loan rate 6% on the interest they're collecting. I mean, or 5%, or whatever the case might be. So it's never going to be like a point for point thing where they're like, oh, we're going to lose money. I mean, yes, they're being generous with the interest they're paying their customer, but look at the member growth, guys. The proof is in the pudding, as they say, little Bo Peep. So guys, tell me something good. Who do we have? Who do we have? Let me go back to the comments, guys. Doofus Rufus is here. Ukeko. What's up, Ukekos? Having too much espresso. I'm jealous. I'm awake, Tom. I'm awake. Not a lurker. Good morning, buddy. What's going on? Oh, that's me. I just got to the office for you turds. Huge beat just announced. That was 418. That was 20 minutes ago, so I'm barely awake. Alberto, I thought it was 3 cents, but let me get into it. Brian, well done. Thank you. Yes, I woke up. I couldn't believe it. It was, I wanted to see the numbers. And by the time my hamster brain gets, hamster wheel gets turning. Buenos dias. Good morning. Good morning, Gamer D. Good morning. Hello. Hello. Um, the turd is awake. You're goddamn right. Yeah, record gap adjusted net revenue up 27%. Ukeko's got the numbers. You guys want the numbers? You go to Ukeko. Go to Ukeko's place, make a coffee for everybody. Um, Coffee and scones. Tom Tom, good morning, Tom Tom. Six Kings, you're the man. You guys are all the man. It's Hybrid Duncan. He is an amalgam of so many things, but he's here, and we appreciate that. Pff, Hybrid Duncan, did I say welcome? Guys, for my new viewers joining us, it's Poco Moss. It's DannyDealz for Hurricane Lopez and Stock. Karen, we are up way too early, and we would just like to say good morning, welcome, and hello. We give you just a little bit more here at Poco Moss. Hello and welcome and welcome and hello and hello and welcome and welcome and hello. And for good measure, let me add hello and welcome. Guys, I couldn't be more excited. I just went from 6 to midnight when I saw these numbers. Um, it's an absolute. I mean, this is what Noto and company do. They take conditions that would put any other company in their position, a student loan company pre-COVID, directly into bankruptcy. They would have looted the company like Sam Bankman-Fried or something and just sent it all to Magnolia. Hey, I'm gonna let my Lord of the Rings girlfriend over here just trade all your money and tell you that it's safe. I'm like, oh, that's okay. Baltimore, they go to the light. Like, what the fuck is going on? These people just buy these private islands and like, or go to the Bahamas. Like, there should just be a regulation that you cannot start some bank or financial institution and just move all your shit to an island. You should have to be where the SEC can literally, shock you with a cattle prod if you start fucking around with client money. And it's like, no, we're out in, some fucking island with some goddamn, medieval justice system and no enforcement action. It's like, what do you think happens when some fucking mop-headed weirdo American shows up with like $10 billion on one of these islands where, there's economic problems and stuff, and they just start throwing money at everybody? You think the regulators are going to be like all on that? Like, oh my God, what's happening here? How's this guy operating? Like, no, of course not. I don't know how I got off on that aside. But anyway, guys, what's going on, Tom from the UK? Turd Army reporting. What's up, Tim Rio? How you doing, my friend? Oh God, SJ Tavares is here. Boom. Exactly, guys. Boom, biddy, bye, bye. As Be Real said, when I put my hand on the Glock, it's time to die. Oh boy, Cypress Hill. I once saw Cypress Hill at the Del Mar Fairgrounds, and boy, there was some absolute psychotic stuff going on in that show. Violence. Oh boy, it was like their people got in a fight with the San Diego cops. Oh boy, it was exciting. Anyway, guys, Ukeko's here again with all the numbers. A tangible book value grew by 68 million. Excellent. Yeah, this is just an absolute crush, an absolute earnings crush, guys. It's not an earnings beat, it's an earnings crush. Let's see what the stock is doing. Up 5%. Okay, that's pretty good, guys. Up 36 cents. Remember, a lot of retarders can't trade pre-market, and if there's not covering on this, I mean, if I wouldn't put anything past like the Chia Pet, the bologna sandwich, some of these unnamed analysts, some of these fucking turds. Let's see, if the Chia Pet's out with an upgrade. Like, let's see if they're actually pounding on the table. Let's see if this fucking chipmunk Dominic Gabriel's pounding on the table that with the obvious growth story intact, not only intact but enhanced and bolstered, that he's pounding on the table that the stock is undervalued. I highly, highly doubt it because he's part of the short turd FUD machine. Let's see Reginald Smith come out and raise. Let's see JP Morgan come out and be honest about what this company is. Let's see this unknown analyst at UBS take off his mask and realize he's a gutless piece of shit. Okay, guys, Deuce Kabuski's in the house. Fill in the gap like only Deuce Kabuski can. Manny's weight loss is here, and he's looking svelte and looking excellent. Upnourish review. Manny, you keep changing your name. It's a little bit hard to track you, but it always starts with Manny, so I'm going to assume it's you. Unless Manny has a bunch of impersonators, doppelgangers, hangers on, wannabes. You should call yourself the real Manny's Weight Loss, like one of those Instagram girls. Bobby Atkinson, you're goddamn right. Good God, I'm up early, Bobby. Is that a big beard? Is that a big epic beard? I tried to trim my beard. I couldn't. I was finding a bird's nest in there, a la like Peter Griffin. Of course, you're here, not a lurker. I never had a doubt. Yeah, I know, Bobby. It's like it's ridiculous, but I said I would get up and I'd live stream this turd, and that's exactly what I intended to do. And when I say I'm going to do something, I'm going to do it, guys. But I'm going to let you guys jawbone at each other. I'm going to go make another latte. Go over to Latte Larry's. Oh God, I don't get me started on that stupid Mocha Joe plot line. We'll still figure a way to pump today. Yeah, I mean it's quite possible, Doug. Again, you can't fight the market. It's not a gap net profit, guys. I mean, if we'd have seen a gap net profit, the stock would not be we wouldn't even be talking about a dump. Like not from 7. But I mean, honest to God, guys, how this dumps from 7 um with these numbers. How do you impeach the witness? How do you impeach management with these numbers? I mean, where's the weakness here? Again, I haven't had a chance to read over this thing. I'm probably going to do that like after the earnings call. I'd rather just listen to Noto and the team than try to like pick through these numbers myself because I'm not that smart. And again, mostly what I do is just listen to other YouTubers and then lift their content and do it in a jovial, humorous way because I've always said there's not enough old fat people on YouTube. It's a young man's game, a young woman's game. There's so many influencers out there. I can't compete with Kylie Cosmetics, okay, guys? I can't sell a cosmetics company for $800 million, but I can wake up early in the morning, say stupid things, and drink coffee and talk to, a couple of dozen marginal types online, a la the Turd Army. No, guys. Hello and welcome. Welcome and hello. Hello and welcome. Thank you for tuning in to Un Poco Mas Special Live Edition. If you haven't heard, if you just woke up, rise and shine, little snoozy. Wake up and smell the smelling salts. But SoFi turned in an absolute monster, guys. Taking a look at the press release for Q3 2023. Record GAAP and adjusted net revenue. GAAP net revenue 537 million, 531 adjusted, up 27% year over year. People are looking for like 21%. Record adjusted EBITDA. I was talking so much about that EBITDA plateau, guys. We couldn't break through 70 million, 71 million, 77 million. Well, we broke through it. As Miley said, we came in like a wrecking ball. So gap EPS loss of 0.29. Um so it's a goodwill and 3 cents per share basically, guys. New member, they were looking for 8 cents or 7 cents depending on what you look at. New member, and my Zach score is FU because, you can give me a Zach score of 3, you can give me a Zach score of 5. It doesn't make any difference. Like the numbers and guys, next quarter, the gap net profit's going to cure all, and the numbers, the ads are reaching a critical mass, and a lot of people looked at Noto with a scant eye, I say. They gave him the stink eye when he said, we're going to be adding 1 million members a month, and he pounded on the table, and he ruffled his windbreaker, and he smoothed his hair, and he said, hear me now, believe me later, bitches. That's exactly what he said at one of those conferences on the golf course. He goes, bitches. Not only were he doing adjusted net, record adjusted EBITDA or, incremental EBITDA margins, he's like, listen, bitches. No, Noto never says stuff like that, but I wish he would. I wish he'd come out and just go like dark Noto, just go completely gangster and just dunk on these motherfuckers. He's just like, I want to say something directly to the Chia Pet. Like, fuck you, buddy. Seriously, right here. Um, of course he can't do that because he's an executive, not some moron on YouTube. Guys, let me point something out about how brilliant I am. Not only handsome, but brilliant. As my mommy would tell you. I was calling for 3 billion. I mean, I said 3.6. It was kind of a joke, but not a joke, but I tend to be extremely bullish, kind of to shock. But I called for 3 billion plus. I kind of was writing buzzing Tanner's comments. Big up to future investing. Also, my favorite guy, the stock goat, Kyle. Like the people who inspired me to make a YouTube channel. I started out kind of making this channel as like a little bit of a joke because I was like, dude, if Stock Mo, you know, people are listening to Stock Mo and he's a moron who's giving you advice that's going to lose you everything in these shitty cryptos. Like, I might not be the most sophisticated investor in the world, but I make money. I make a lot of money in the market. Because I think a lot of it is because my thinking and the way I act is just very, very simple. I just buy low and I sell high, and I just don't fall victim to the sort of emotional traps that market makers set for us. They drive the stock down to $4 and whatever cents, and I'm looking at the growth, and I'm looking at what everything's. I'm not even thinking about selling. There's not even 1% of me that says, "Hey, I'm going to dump my SoFi shares down here under 5." All I'm doing is gathering every bit of capital, going through my couch cushions, my car, finding every bit of change, taking all my aluminum cans in, and I'm buying every single share of SoFi I can get my hands on. Because what I do in the market, guys, is I build long-term wealth um, by identifying companies that are extremely undervalued. And again, I have a track record of doing that, and people who know me from way back sort of know the legend of DannyDealz. And some of the things I was able to accomplish early on in some of the companies I identified when everyone else thought they were garbage, and now they're like the FANG stocks and now they're the stocks everybody talks about. But back when I was telling folks to buy them, everyone laughed at me and thought they were garbage. And laugh away. But he who laughs last always laughs best. And the chubby guy on YouTube is going to be laughing his ass off because this is going to be the next stock that makes me millions of dollars, and that's just the way it is, guys. The naysayers and the turds and the bears and the shitbags and the chia pets and the drive-in forehead bologna sandwiches. You know, these guys can say whatever they want, but facts don't lie. You're all a lot of things they always say in politics, like you're entitled to your own opinion, but you're not entitled to your own facts. And that's the difference. That's the problem I have with these analysts. You can look at the numbers and you can interpret them a certain way, and you can look at the macro and you can say it's going to affect things a certain way, but what you can't do with this is deny the growth story. And I said, guys, we'd be looking at deposits of 2.9 billion, and I said at least 3. I was jawboning at future investing. I said 3 billion. I'm going to call my shot. And so 2.9 billion, God, that's pretty damn close. Looks really, really good. I know last quarter, I believe it was 2.7, and people thought it would be impossible to hit that number. I think analysts were looking for 2.1 to 2.3. So, analysts, hold on, I have something for you. It's right here in my pocket. Oh, yeah, here it is. I've been keeping it warm for you all day. Um, and Anthony Noto, Chris Lapointe, the whole team, Liz Young, my favorite TV personality. Um, you guys fucking rock. So that's the SoFi stock. What else? Tangible book values there, guys. I got to go make some more coffee. Does anyone have anything even remotely intelligent to say? Is anybody watching? Manager's here. Good morning. What's up, manager? Thanks for joining us. Um, all of us are turds here, manager. Even big, important guys like you. We're all equal in the eyes of the turd master. And I'm not even the turd master. Stock Heron's in charge here. I just work here. Guys, I clean the office, basically. I'm like the Goodwill Hunting of YouTube. Like, I just found these cameras and lights, and no, it's just one webcam, but I clean the office here, and I flipped it on, and like, also when I clean the local Caltech, and I also solve equations there on the chalkboard. But my answers are always incredibly wrong, but they've actually detected a new learning disability in how I've attempted to solve the equation. So I'm adding to the, you know, LexisNexis of knowledge, or whatever we can say. Yes, manager, we are good. We out a absolute fucking blowout. Trounce, huge guidance raise, huge EBITDA blowout. Huge member growth blowout, huge. And the most important thing, guys, is that that deposit growth. I mean, $3 billion in deposit growth, guys. We're way over 15. We should be way over 15 billion now. I mean, I don't know how this is a bank with no legacy costs, a technology arm. SoFi grew accounts. I mean, guys, I again, I will dig into this and I would read over it carefully and I will do a breakdown for you later on in the week of like the real nuances. Again, that's after I have the chance to copy the very smart people on YouTube who actually, hopefully Steve Areno, Steve Fiorio, and as I've noted, I'm the number one Steve fanboy out here on YouTube. I'm starting a fan club for Steve very soon. The sexy Fred Flintstone. Um, dude, ass face. Oh yeah. Oh yeah. Hey dude. I think the Hawaiian Punch guy used to say that. Oh yeah. Hey dude. Hey manager. Hey guys. Hey, what's up? Hey, I'm Left Chinito. What is goodwill impairment? I'll go through that. It's a write down. I think it's basically a write down of the value they place on the goodwill. It's like it's a write down basically, but I'll let Noto explain it. Um, yeah. What's going on, guys? You have the best of the best right now here, DannyDealz. Yeah, we have Noto, we have SoFi, we have Hybrid Duncan, we of course have Jay Nelson, Chinito, Jason Joseph, my contrarian don't pass betting two first name friends, but I said it when I saw his purple dress shirt and his avatar. The guy has guts, and he came back on and he said, I just want to come personally tip my cap and acknowledge you called it on the member growth. Thanks, man. Yeah, I was I had a little, little devil on my shoulder that said Jason Joseph is right. Like it's not gonna be that strong. But I went with my instincts, guys, as I always do, and I said summer is going to be great for SoFi. These member growths, we're finally reaching critical mass where like it matters, guys, that last quarter we got 600,000 new members, and those new members were brought in by the high interest rates. The reason you're moving is because you have money to deposit. So that we're not just getting these zombie revenue guys. There's always this one of the trolls on stock twits. I forget which one, but he's always making this just asinine point over and over and over. He's such a fucking moron. But I mean, it's stock twits, so I'm on stock twits. Okay, pot meat kettle. But his point is, if they're just these members are never left off the rolls, so member growth doesn't matter because somebody could come on, just check their credit score on Relay, and they're counted as a member forever. But guys, you can get a free credit score anywhere. People aren't joining SoFi and, depositing money in SoFi and get a free credit. Look at the deposits. That's what you can't deny. The customers who are coming there are bringing money. These are going to be profit revenue generating customers. These are not freebie turd customers. Guys, let me see if we get in here. Yeah. Yeah. We here now, guys. We here now. Guys, I'm going to go redouble up my coffee. This earnings call should start in about 4 minutes. I'm going to let LMF Chinito take over. It's pretty good news. Yeah, yes, I did see that. Yeah, you're right. Chinito speaks the truth. There is truth in what you say, Chinito. It's not like the greatest thing ever. It was this this really cool Native American guy in Alaska, and he's like the kids these days in my village, they don't want to learn the old skills, the old ways. They all have TV and they don't go out. And he's like you kind of see though. He's chilling. He's like got his like smartphone, and the person interviewing him is like, "Well, do you have a TV?" He's like, "I have three." So it's like so he could sound really smart and spiritual and still be kind of I don't know, full of shit. But yeah, dude, I'm all into Chinito. Guys, I'm gonna make another latte. You guys get you a cup of coffee. I'm gonna let you. What do we want to watch? Pre-market, and then we'll switch back over to the earnings in about 3 minutes. What do we got, guys? This should be up big. It should be up big. This should go up how much it went up last time, and it should stay there. It shouldn't be a pump and dump. Watch. This could make a huge move, guys. I mean, I got to do some math, but this could actually short squeeze if people come in. Institutions should come in. I think the smart institutions aren't going to wait for Q4 when the stock's going to be, over $10. This music can be a little bit annoying, so let me just pause. Is that coming through, guys? Can you hear the audio from this little ditty? Yeah, it looks like I can on my levels. How are your levels? I'm going to turn you up a little bit on my desktop. Turn this up a little bit. All right, you let me know if it's clipping or bumping my audio. One of my Goodwill ambassadors, not a lurker, anybody who he delegates and who else is in charge, but I don't know how to actually set that, but not a lurker is in charge of the chat, so if you guys get out of line, you're going to answer to him. And he's active now. He's not on the sidelines. It's not the wallflower he once was, but it looks like that's coming through. I'm going to just go ahead and turn that down for now. I'm going to go ahead and, let's just put the pre-market action up. Let's see what how the news turds are reacting. That short interest could become problematic. Let's see what's coming across the wire. We got the 8K, third quarter, Wall Street bets stock rise, Business Wire. They got it out on the wire, of course. Remember, guys, short interest has been up. Guys, I don't want you to miss any of this, so I'm just going to go ahead and put this up and let the annoying audio rip. So if you guys don't want to hear this elevator music, mute it for 1 more minute, but otherwise your turds can deal with it. I'm going to go make a latte. Talk amongst yourselves. Discuss. It's coffee talk. It's no big deal. What's up, guys? They changed the elevator music. I thought something was happening.
Hello all, and thank you for your patience. Today's call will begin shortly.
Espresso robot is working on my second shot, so bear with me. Carlos Rodriguez, you're here. I remember when I used to say Rodriguez, and I was like, I thought he said Portuguese names. Noto Donkey punched him right in the sphincter. Goddamn right. Yeah, I'm just my robot is making my shot. I saved so much money on this espresso robot. What's up, Jay Nelson? Here we go, guys. Let me get my coffee.
Good morning, and thank you for attending SoFi's third quarter 2023 earnings conference call. All lines will be muted during the presentation portion of the call, with an opportunity for questions and answers at the end. At this time, I'd now like to turn the conference over to our host, Maura Sear from SoFi Investor Relations. Maura, please go ahead.
Thank you and good morning. Welcome to SoFi's third quarter 2023 earnings conference call. Joining me today to talk about our results and recent events are Anthony Noto, CEO, and Chris Lapointe, CFO. You can find the presentation accompanying our earnings release on the Investor Relations section of our website. Our remarks today will include forward-looking statements that are based on our current expectations and forecasts and involve risks and uncertainties. These statements include, but are not limited to, our competitive advantage and strategy, macroeconomic conditions and outlook, future products and services, and future business and financial performance. Our actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are described in today's press release and our most recent Form 10-K as filed with the Securities and Exchange Commission, as well as our subsequent filings made with the SEC, including our upcoming Form 10-Q. Any forward-looking statements that we make on this call are based on assumptions as of today. We undertake no obligation to update these statements as a result of new information or future events. And now I'd like to turn the call over to Anthony.
Thank you and good morning, everyone. Before my formal remarks, I want to take a moment to recognize the devastating tragedy that is currently taking place in Israel, Gaza, and the surrounding regions. It's been incredibly difficult to witness the acts of terrorism and resulting war unfold over the past couple of weeks and what is sure to be tough days to come. The murder of innocent people is not acceptable in any form, and it's beyond belief that such actions are unfolding in the world today. With that, let's turn to our third quarter results. The third quarter at SoFi marks our 10th consecutive quarter of record revenue and 5th consecutive quarter of record adjusted EBITDA. We delivered strong diversified growth with record revenue and improved margins across all three of our business segments. Among our notable achievements in the quarter, I want to highlight two major milestones. First, 67% of our absolute growth in adjusted net revenue dollars was driven by the non-lending businesses, specifically the technology platform and financial services segments. And second, our financial services segment achieved positive contribution profit for the first time, making all three reported segments profitable while bolstering our consolidated profitability, even while we continue to invest aggressively for high levels of compounding growth for years to come.
Technology side.
These overall results are a testament to our ability to outperform in difficult or rapidly changing environments,
Guys, I'm going to talk
but also our ability to deliver on our goals and our overall mission while maintaining financial discipline and continuously setting new operational and financial records.
So
I'm excited to share more about this quarter's notable achievements. A few key financial achievements from the third quarter include adjusted net revenue of $531 million rose 27% year over year, and importantly, all three segments recorded record revenue, and we continue to diversify the revenue composition. Adjusted EBITDA of $98 million represented a 48% incremental margin and a record 18% consolidated margin. Our financial services segment achieved positive contribution profit of $3.3 million at a 3% margin versus a $4 million loss last quarter and a $53 million loss in the year-ago quarter. Our technology platform segment had a contribution margin of 36% versus 20% in Q2 and 23% in the year-ago quarter. In our lending segment, more than 77% of our adjusted net revenue was net interest income, which grew 90% year over year to $265 million, nearly 2x lending directly attributable expenses of $139 million. That's to say our net interest income is now nearly 2 times greater than our expenses. Segment contribution margin improved by nearly 300 basis points sequentially to 60%. At the company level, excluding one-time items, incremental GAAP net income margin of 48% resulted in a loss of just $19.5 million versus $48 million loss last quarter and a $74 million loss in the year-ago quarter. Earnings per share loss, excluding the impact of goodwill impairment, was 3 cents per share. SoFi Bank reported $84.8 million of GAAP net income at a 19.3% margin, representing 13% annualized return on tangible equity. We remain well on track for GAAP profitability for the overall company by Q4 and in the years that follow. From a balance sheet perspective,
Guys, did
our
you just
unique
hear
value
that?
proposition in SoFi continues to fuel
Affirmed
high-quality
Q4
deposits
profit well
that
on our
increased by
way.
a record of
That sounded
$2.9
very
billion
sure.
sequentially, and we
What do you
ended the
guys
quarter
think?
with
Was
nearly
that sure?
$15.7 billion in total deposits.
Sounded sure to
Importantly,
me.
more than 90% of our consumer deposits are from sticky direct deposit customers, and 98% of our deposits are insured.
Does anybody want to shout out on
Our
the
cash and
LE?
cash
Hit me up
equivalents,
in the
excluding
comments.
restricted cash, remained healthy at $2.8 billion, reinforcing our strong liquidity position. We grew tangible book value for the third consecutive quarter by a record of $68 million at the consolidated level. On a trailing 12-month basis, we generated $171 million in tangible book value growth. From a member and product perspective, we added 717,000 new members in Q3 23, bringing total members to nearly 7 million, up 47% year-over-year, and acceleration in growth. Our highest quarter ever of new products in Q3 of 1 million brought total products to 10.4 million at quarter end, growing by 45% year-over-year. Also an acceleration with record product additions in both lending and financial services. Even with this rapid growth in members, overall products per member remains at 1.5x, reinforcing the appeal of our robust product suite and multi-product adoption by existing members. Financial services products of 8.9 million at quarter end grew by 50% year-over-year, while lending products of over 1.6 million were up 24% year-over-year. I am incredibly proud of these accomplishments and the progress achieved on our march to making SoFi a household brand name. Unaided brand awareness continues to grow as a result of successfully executing viral marketing campaigns, bolstered by key events at SoFi Stadium, improving customer satisfaction, driving word of mouth, and the result of us truly helping people get their money right. Now I'd like to spend some time touching on the segment level results and trends. Lending adjusted net revenue of $342 million grew 15% year-over-year. The personal loans business maintained its strength in the quarter, with record originations up 38% from Q3 22. Student loans, as expected, saw some increasing demand ahead of the resumption of student loan payments, marking our highest origination quarter since Q1 of 2022. Within home loans, total originations were up 46% sequentially and 64% year-over-year, despite a continued challenging rate environment for both purchase and refi. We continue to fully leverage the benefits of our bank license to drive greater economics in both our lending and financial services businesses. This has resulted in strong net interest income and sequential net interest margin expansion as lower cost deposits on our balance sheet have grown. As of the end of Q3, over 65% of our loans were funded by deposits, and our $2.9 billion of new deposits raised in the quarter were essential in funding our $5.2 billion of total originations and $2.8 billion in net loan growth in the most cost-effective way. Our lending capacity remains robust, with over $27 billion in total capacity to fund loans and meet our liquidity needs, which includes our $15.7 billion of deposits, $3 billion of equity capital, and over $8.4 billion of warehouse capacity. Lastly, the bank contributes to strong growth in SoFi Money products, high-quality deposits, and great levels of engagement. This has led to higher average account balances, even as average spend has increased. SoFi Money products have increased nearly 53% year-over-year to 3.1 million accounts.
Huge blowout.
Given the quality of these members, with a median FICO of 743 for our direct deposit portfolio, we see ample opportunity for cross-buy. More than 50% of newly funded SoFi Money accounts are setting up direct deposit by day 30. And this account primacy, as expected, has had a significant impact on spending, which exceeded $1 billion in quarterly debit transactions volume, up 3.2x year-over-year, and represents more than $5 billion of annualized debit transaction volume. Within financial services more broadly, net revenue grew 142% year-over-year and 21% sequentially to $118 million, driven by continued strong monetization within the segment, which Chris will cover in more detail later. What is most impressive in the financial services segment is that we reached $3.3 million in contribution profit, despite still spending significantly across money, credit card, and invest. Moreover, the credit card and invest businesses are still in heavy investment mode, generating significant losses at a run rate of well over $100 million annually. As they scale acquisition in order to achieve variable profitability, they'll eventually see positive contribution profit, similar to how we delivered with SoFi Money. Selection is one of our key points of differentiation across our products. During Q3, we enabled our invest members to participate in 3 initial public offerings, including the Oddity IPO, the Instacart IPO, and the ARM IPO. Providing retail investors access to IPOs at IPO prices, which was once unthinkable, is just another way we're working to help level the playing field for our members. This differentiation helps bring more people onto the platform while increasing brand awareness and member growth. We were delighted to see such high-quality demand in these offerings and growth in our member base. For our technology platform, full segment revenue of $89.9 million saw a slight acceleration in growth of 6% year-over-year. Importantly, as noted previously, we expect the year-over-year growth rate in technology platform revenue to continue to accelerate into Q4 with increased contribution from new partners to the platform, along with greater product adoption among existing partners. Tech Platform's overall diversified growth strategy includes growth in new vertical segments such as B2B and traditional financial institutions, new products and geographies, and a focus on partners with large existing customer bases with more durable revenue streams and growth prospects. In Q3, Tech Platform made significant strides against this strategy, with the majority of new signed clients bringing existing customer bases and portfolios, which drives much faster time to revenue generation compared to a startup, along with a growing pipeline of joint opportunities selling combined Galileo and Technisys offerings into an expanded customer base. The demand from traditional financial institutions and new categories is the most robust that we've seen. While the lead times for winning RFPs and ensuing integrations are long, measured in many quarters, not months, their transition to modern processing and modern cores is playing out in real time the way we envisioned it would. On the product side, we continue to build and ship a diverse range of products for multiple sectors. We launched a corporate credit solution, which is designed to modernize expense management for both financial and non-financial corporations by introducing a central account with a single credit limit. In addition, we've expanded our Buy Now, Pay Later offering to allow lenders to offer it as a form of working capital loans for the small business clients, a great example of the joint Galileo and Technisys capabilities. And third, Galileo-powered Experian's launch of an innovative debit card program that allows users to improve their credit scores. From a geographic perspective, we received MasterCard certification to provide our payment cards and processing services in 5 new LATAM countries. Additionally, we have continued to see great product uptake in new standalone products such as our Payments Risk Platform product, which has recently been launched to the entire financial services ecosystem, not just existing Galileo clients, as well as Connecta, our natural language AI-driven intelligent digital assistant, which provides faster resolution of customer contacts and reduced contacts per customer for our partners, as well as SoFi. I'll finish here by saying how proud I am of the team's relentless ability to not just persevere through the disruption and volatility of the financial services industry in the first 3 quarters of the year, but to deliver record results. I could not feel more blessed by our great team's ability to execute, and importantly, our more than 7 million members that have been so critical in making our vision of being a one-stop shop for all your financial needs become such an amazing reality. With that, let me turn it over to Chris for a review of the financials for the quarter and our outlook.
Thanks, Anthony. Overall, we had a great quarter with strong growth trends across the entire business. We achieved record revenue and adjusted EBITDA despite operating in a rapidly evolving macro backdrop with notable financial services industry headwinds. I'm going to walk you through some key financial highlights for the quarter and then share some color on our financial outlook. Unless otherwise stated, I'll be referring to adjusted results for the third quarter of 2023 versus third quarter of 2022. Our GAAP consolidated income statement and all reconciliations can be found in today's earnings release and the subsequent 10-Q filing, which will be made available next week. For the quarter, top-line growth remained strong as we delivered record adjusted net revenue of $531 million, up 27% year over year and 9% sequentially from the second quarter's record of $489 million. Adjusted EBITDA was $98 million at an 18% margin, also ahead of the prior record quarter at $77 million. This represented over 7 points of year-over-year and nearly 3 points of sequential margin improvement, demonstrating significant operating leverage across all functional expense lines. In fact, sales and marketing declined as a percentage of adjusted net revenue for the fourth consecutive quarter, with marketing intensity 349 basis points lower relative to Q3 2022. Overall, this resulted in a 48% incremental adjusted EBITDA margin year over year. If you look at marketing expense per new member, this quarter saw a 17% decline versus last quarter and a 32% decline versus the year-ago quarter. This is a function of increased monetization of our member base and investments made in all of our operating segments, as well as continued improvement in marketing efficiency and success of our financial services productivity loop. Our GAAP net losses were $267 million this quarter. Excluding the one-time impairment expense of $247 million, net losses would have been $19.5 million, which is a $55 million improvement year over year. We saw notable year-over-year leverage in stock-based compensation, with SBC dropping to 12% of adjusted net revenue versus 19% in the prior year period. Our incremental GAAP net income margin would have been 48% for the quarter, excluding the one-time goodwill impairment expense. This is a non-cash charge that has no impact on tangible book value, which grew by $68 million to $3.3 billion. We remain committed to achieving GAAP net income profitability in Q4 2023. In terms of GAAP EPS, our reported loss of 29 cents, when adjusted to exclude the one-time impairment expense, would equate to a loss of 3 cents. Now, onto the segment level performance, where we saw a strong year-over-year growth across all three segments. In lending, third quarter adjusted net revenue grew 15% year-over-year to $342 million. Results were driven by a 90% year-over-year growth in our net interest income, while non-interest income was down 51%.
Year-over-year
growth in net interest income was driven by a 113% year-over-year increase in average interest earning assets and a 244 basis point year-over-year increase in average yields, resulting in an average net interest margin of 5.99% for the quarter, which is a 13 basis point expansion year-over-year, and importantly, a 25 basis point expansion versus Q2 2023. I'd also highlight our $2.9 billion of deposit growth in the quarter, compared to the $2.8 billion of net loan growth on the balance sheet period over period. With 219 basis points of cost savings between our deposits and our warehouse facilities, this has resulted in a meaningful benefit to our net interest margin and has underscored the advantage of holding loans on the balance sheet and collecting net interest income. We expect to maintain very healthy net interest margin as a result of two things. First, the mix of funding will continue to move toward deposit funding, which is currently north of 60%. And second, we will continue to pass on benchmark rate increases for new loan originations. On the non-interest income side, Q3 originations grew 48% year-over-year to $5.2 billion and were driven by strong performance from all three products, even as we continued our unrelenting focus of underwriting against our stringent credit standards. We saw record volumes in our personal loans business, which grew 38% year-over-year and 4% sequentially to $3.9 billion. Our student loans business saw origination volume double year-over-year and grew notably on a sequential basis to $919 million, ahead of the resumption of payments.
We got this.
Home loans grew by 64% year-over-year and 46% sequentially. And this growth, despite continued headwinds from the current rate environment, stems from the early benefits of the integration of Wyndham Capital, which has allowed us to add deep fulfillment expertise into our tech stack and better fulfill member demand. In the third quarter, we sold portions of our personal loan and home loans portfolio.
Profit center.
In terms of in-period sales execution levels, we sold personal loans at an execution level of 105.1%, and we sold home loans at a weighted average execution level of 100.2%. In addition, last week we executed a $100 million sale of personal loans at a 105.1% execution to the same partner who purchased personal loans in Q3, and we agreed to terms with that same partner for a $2 billion forward flow agreement at similar execution levels. We are also in the market, including in discussions with funds and accounts managed by BlackRock with respect to a $375 million securitization at favorable execution levels, and that is expected to close mid-November. Our personal loan borrowers' weighted average income is $167,000 with a weighted average FICO score of 744.
Prices paid for their loans.
Our student loan borrowers' weighted average income is $180,000 with a weighted average FICO of 781. Our on-balance sheet delinquency rates and charge-off rates remain healthy and are still below pre-COVID levels. Our on-balance sheet 90-day personal loan delinquency rate was 48 basis points in Q3 23, while our annualized personal loan charge-off rate was 3.44%.
Okay.
Our on-balance sheet 90-day student loan delinquency rate was 14 basis points in Q3 23, while our annualized student loan charge-off rate was 38 basis points. We continue to expect very healthy performance relative to broader industry levels. The lending business delivered $204 million of contribution profit at a 60% margin, up from $181 million a year ago, which represented a 61% margin. Shifting to our tech platform, where we delivered record net revenue of $90 million in the quarter, up 6% year over year and 3% sequentially. Annual revenue growth was driven primarily by a Galileo account growth to $137 million in total. The segment delivered a contribution profit of $32 million, representing a 36% margin, up significantly quarter over quarter as we leverage investments made to integrate Galileo and Technisys and to position the segment for higher rates of diversified, durable growth going forward. We expect the technology platform segment revenue to see an acceleration in Q4 with ongoing strong margins as we leverage prior investments. Moving on to financial services, where net revenue of $118 million increased 142% year over year, with new all-time high revenue for SoFi Money and Invest, and continued strong contributions from SoFi Credit Card and Lending as a Service.
Everything is bullish.
Overall monetization continues to improve, with annualized revenue per product of $53, up 61% year over year versus $33 in Q3 22, and up nearly 8% sequentially, driven by higher deposits and member spending levels in SoFi Money, greater AUM and monetizable features in SoFi Invest, and stability within SoFi Credit Card spend. We reached 8.9 million financial services products in the quarter, which is up 50% year over year, and we saw record product adds with 957,000 new products in the segment. We hit nearly 3.1 million products in SoFi Money, 2.5 million in SoFi Invest, and 3 million in Relay. For the first time, this segment reached positive contribution profit at $3.3 million for the quarter, and we continue to expect positive contribution in the segment in Q4 23 and beyond. This is while we continue to invest aggressively against ample opportunities to rapidly grow this operating segment with attractive returns. Switching to our balance sheet, where we remain very well capitalized with ample cash and liquidity. Now more than ever, SoFi Bank reinforces our strong balance sheet and provides us with more flexibility and access to a lower cost of capital relative to alternative sources of funding. In Q3, assets grew by $2.4 billion as a result of strong growth in both student and personal loans. On the liability side of the balance sheet, we continued strong growth in deposits, reaching $15.7 billion, up $2.9 billion sequentially versus $2.7 billion in the prior quarter and $2.7 billion in Q1.
I'm levered up.
Important to note that deposit growth outpaced loan growth for the third consecutive quarter, resulting in more efficient funding costs and a lower reliance on warehouse lines as we ramp the portion of loans that are funded by deposits versus other sources of capital. Because of this, we exited the quarter with $4 billion drawn on our $8.4 billion of warehouse facilities. This further highlights our strong liquidity position, particularly in this market. In terms of our regulatory capital ratios, our total capital ratio of 14.5% as of the end of the quarter remains comfortably above the regulatory minimum of 10.5%. Throughout the last 12 months, we have demonstrated the benefit of having a diversified, high-growth set of revenue streams multiple cost-efficient sources of capital, a keen focus on underwriting high-quality credit, and a high degree of operating leverage as we scale the business. We expect those benefits to persist going forward, even in light of the existing macro backdrop. For the full year of 2023, we now expect to deliver revenue of $2.045 to $2.065 billion, above our prior guidance of $1.974 to $2.034 billion, and full year 2023 EBITDA of $386 to $396 million, above our prior guidance of $333 to $343 million. For the full year, this represents 33 to 34% adjusted net revenue growth, 19% adjusted EBITDA margins, and a 48% incremental adjusted EBITDA margin, meaning we expect to drop 48% of all incremental revenue to the bottom line, despite growing at more than 30%. In terms of depreciation and amortization and stock-based compensation expense, we expect mid to high single-digit percentage increases in the fourth quarter relative to the third quarter results. With that, let's begin the Q&A.
Thank you. We will now open the line for Q&A. Please press star followed by the number one if you'd like to ask a question, and ensure that your device is unmuted locally when it's your turn to speak.
Let's listen.
Please limit yourself to one question only.
You guys can hear
If
me
you'd like to
anyway.
ask another question, please re-enter the queue.
I'm excited, guys.
Our first question today comes from Andrew Jeffrey of Truist.
Andrew Jeffrey's
Your
the
line
best
is open.
analyst in the
Please go
world.
ahead.
Let's listen.
Hi, good morning. Thanks for taking the question.
In the third quarter,
nice
we sold portions of our personal loan and home loans portfolio. In terms of in-period sales execution levels, we sold personal loans at an execution level of 105.1%, and we sold home loans at a weighted average execution level of.
I don't know what happened.
All right, we got you.
Yeah, they had some technical thing there, guys. I don't know what's going on.
All right, Andrew, go ahead.
Good. Okay, great. Thanks. Appreciate it. I wanted to ask about the decision to sell some personal loans, sort of how you arrive at the decision as to which loans you sell, and you got great execution in the quarter. Could you compare that to the marks or the assumptions for those loans that you continue to hold on the balance sheet?
Yeah, sure. Thanks for the question. So what I would say here is that we've really built a nice high-quality balance sheet that's generating net interest income that's nearly 2 times the costs of our directly attributable expenses to that segment. Now, despite cutting credit and driving up quality of our loans, we are still and will continue to see a lot more opportunity to originate more high-quality loans. So selling at these attractive prices at the 105.1% that I mentioned, plus having the opportunity to originate more, is optimal at this point. In terms of how the execution compares to where the loans are marked on the book, we sold at 105.1%, and the book is marked at 104.0%, which is down 10 basis points quarter over quarter, despite the weighted average coupon on the overall portfolio increasing.
So they wrote down the loans a little bit and then sold them for more than 1% over the book value.
Operator, next question.
Guys, this is the guy who just asked that question, Andrew Jeffrey, pure 5-star analyst. Okay, he's one of the very top guys on tip ranks, right? 58% of the time. Solid. Let's see who's up next. It's not DannyDealz, I know.
Operator, can we take the next question?
Let's see who it is, guys.
Our next question comes from John Hecht of Jefferies. John, your line is open.
Another SoFi, big SoFi bull.
Morning, guys. Congratulations on a good quarter. I'm just wondering, you've got a resumption of growth in student lending demand. You're still growing the other products too. I'm wondering, how do we think about kind of the mix at the bank and the NIM at the bank over the next few quarters, as particularly as the student lending reverts to normal demand sequences?
Yeah, it's definitely going to play in our favor. The way I think about it is we have a pretty good hand to how we allocate capital. And we're going to allocate the capital based on what's going to give us the best balanced returns. As Chris mentioned, we've grown the balance sheet really well over the last 2 years since having the bank. It's generating impressive amount of net interest income. It's more than covering our costs there. In the quarter, you saw that we drove 67% of our growth in absolute dollars from non-lending, from the tech platform, and from financial services. I think you should expect that type of trend to continue in that it's balanced or skewed more towards non-lending. As we think about our balance sheet, we think about the student loan business in particular, what I'd say is we saw exactly the trend we expected in student loans in the quarter, which was a slight bump relative to where we've been in the past. We don't expect to see a step function change in student loan originations for a couple of reasons. One, I think student loan borrowers, federal student loan borrowers are refinancing for the two reasons we mentioned. One is saving specifically in cost relative to their current rate and getting a lower rate, and then others that are looking to lower their monthly payment, some of which are doing that at actually higher rate than they are today. And so we think that will be a slow, steady climb as people hit each month of having to pay their bill. The second factor is our decisions. We're going to be very prudent in how we allocate capital and maximize returns. And now that we have 4 effective loan platforms to allocate that capital to, it'll really be driven by the opportunity needs, 4 being home loans, in-school loans, in-school student loans, student loan refinancing, and then personal loans. The other thing I would just mention is that we did see an acceleration in growth in the technology platform. The pipeline there is pretty visible, and it's the most robust that I've seen. It'll take quarters to answer RFPs, not months, and to integrate partners, but we made the transition in that business over a year ago, and we'll start to anniversary the tougher comps in Q4, and we'll see an acceleration in that business as well. So really strong prospects in tech platform, great trends in financial services. So think about SLR and PL being additive to growth, not the driver of growth as we go into 24.
And then the only other thing I would add, John, in terms of the actual NIM margins specifically, we are expecting those to remain very healthy throughout the remainder of the year, but we are taking a bit of a conservative approach, and that's what's currently embedded in our guidance. Reason for that is obviously as a result of increases in cost of funds and various pricing strategies, as well as a mix shift into student loan refinancing.
They have to pay more money for what the money they're lending also. That's not their
Thank you.
deposit. So
Our next question today comes from DannyDealz of Mizuho.
more.
Your line is open.
Hey guys, terrific results. Really, really strong. I just have one question. We're at the end of October now. Can you maybe talk about overall trends, consumer health, everything you're seeing into the fourth quarter? There's obviously a lot of debate out there in terms of the overall health of the consumer. I'm sure you're seeing a lot of it, so would appreciate some comments on that and your business. Thank you.
Sure. First, I'd like to caveat all my comments with the fact that we are relatively unique in that we're a secular grower, not a cyclical grower at this point. Yes, there are cycles in some of our businesses, but the vast majority of our growth is us taking market share from existing incumbents as opposed to an indication of the economy or the economic cycle. So secular growth is a driving force. That said, we continue to see really strong demand for our products and really strong consumer trends. In SoFi Money, we're seeing balances increase on a per account basis, not just new accounts adding to our deposits. We're also seeing increased spending on a per account basis, not just because we're adding new accounts. And so those are two positive underlying trends. We've also seen the quality of our deposits remain strong. 90% of our deposits are from direct deposit customers, and 98% are insured deposits, which means they're not just high quality, but they're diversified. In addition to that, our invest business continues to benefit from the growth of our member base overall and cross-buying, and we see nice trends there from an assets under management standpoint. As it relates to loans, we're seeing unprecedented demand for unsecured personal loans, and obviously we saw an uptick in student loan refinancing. I think the student loan refinancing trend that we report will be more driven by what we decide to underwrite than the actual demand. And I think you can say the same for our personal loans, which has been the case for the last 2 years. We've continued to reduce the credits that we're willing to approve, and we're seeing continued strong demand, even in higher credits and higher quality. And so, Chris, would you add anything to that?
No.
Thank you, Dan.
That was Dan Dolev, I believe.
This quarter. And then on the contribution margin side, is the big investment period in that segment done at this point? Like where should you expect segments to trend? And as you grow internationally, is there a difference in the revenue or margin profile between a U.S. account or a Latin American account that we should be just keeping in mind as we think about modeling this business out over the next few years? Thank you.
Mahir from Bank of America.
Thank you for your question. And I'll talk about the overall trends in terms of demand and account growth, and Chris will talk about the leverage that we're getting there and where we are in an investment cycle, which we've talked about the last couple of quarters. The demand within the technology platform segment is as robust as we've seen. Strategically, we pivoted away about a year and a half ago from signing up a high number of accounts each quarter that would have low volume to focusing on larger customers that were more durable and that could not just survive the economic cycle, but that also could be durable through the lack of financing in the private market. In addition to focusing on larger customers that are more durable, we started to build out other verticals such as the B2B channel. With the products that we had, they serve both B2C companies and B2B companies. In addition to that, we focused on non-financial institutions that have large customer bases and financial institutions that do have large customer bases as well to get to time to revenue much faster. We'll start to see the benefits of that slowly, gradually hit the revenue number over the next 18 to 24 months. It won't be a step function at all. I don't want to mislead anybody there, but it'll be a nice steady climb on a nice steady slope.
What's your name, buddy?
The results of our strategic switch are really paying dividends, and right now we're in RFP stages with a number of large financial institutions. We've actually won a regional bank deal that's one component of a larger piece of their business that will come on over the next 18 to 24 months. But the pipeline is very strong on both financial institutions, incumbent banks, and non-financial institutions, as well as B2B. And so the growth prospects that we're expecting there have really started to come through in a much bigger way as many institutions are under pressure to upgrade their technology and to go after new growth opportunities. I'll let Chris talk about the expenses.
Yeah, in terms of the declining attributable cost, as well as the margin expansion that we saw at 36%, this is part in due to realizing the benefits of early investments that we've made in these businesses to push technological and product development and to integrate the two platforms. In addition, Q2 was elevated as a result of a few one-time items, including FX and country-related taxes. And then in Q3, we benefited from lower comp and benefits as a result of maxing out on payroll taxes for the year and a few other one-time items. As far as the margin profile looking ahead, you can expect continued strong margin performance as we've already made so many investments to integrate the two businesses and position the combined entity to leverage demand from a broader mix of clients with more durable revenue.
It's a lot higher than this, actually.
Overall, we're expecting margins to be in the upper 20s to 30% in the near term.
Cost to borrow today is going to be very high.
Our next question comes from Kevin Barker of Piper Sandler. Your line is open.
Here we go, Piper Sandler.
Morning. Thanks for taking my questions. I just wanted to follow up on some of the movements on the balance sheet, particularly the loan sales. We saw, capital ratios, come down a bit, but it seems like this $2 billion forward flow agreement will relieve some of that. And also tangible equity grew $68 million. Just given these factors, where do you expect, capital ratios to drift over the next couple of quarters, particularly if we start to see a larger amount of loans come off the balance sheet due to forward flow agreements? Thank you.
Yeah, hey, Kevin. So our total capital ratio you'll see in the disclosures is 14.5%. That's 400 basis points above our 10.5% regulatory minimum. We aren't currently providing a specific outlook in that ratio, but what I would say is that there are a number of tailwinds that will help bolster our capital ratios. First, we have a growing book value. We've been growing book value for the last 5 quarters in a row and expect to sustain that going forward, particularly as we reach GAAP profitability in Q4. As you mentioned, $68 million of tangible book value growth.
They're not even talking about the GAAP profitability like it's even a question.
Second, we have a robust demand and pipeline of loan buyers at solid execution levels. As I mentioned in my prepared remarks, we are selling $475 million in Q4 at a favorable execution. and we have a $2 billion forward flow lined up at favorable execution.
10%
And then
now,
third,
guys.
the size of our loan
That
book
makes
and the
sense.
relatively short duration of
It's a
personal
runner.
loans in
It's a runner.
particular, the amortization on a quarterly basis is quite material now. Between our personal loans business and the student loan refinancing business in quarter three, amortization
Business has, and some of our other businesses within the financial services segment. And I mentioned that on an annualized basis, we're losing well over $100 million in a couple of those businesses. That's a discretionary expense that we could decide to be more conservative on and drive to profitability faster. The scale that we have in our member base now at over 7 million members really gives us a significant opportunity just to market to our own members in a bigger way, to help them get their money right with additional products and services that meet their needs based on the data that we have.
Up 11%.
I can't underscore that enough.
Anthony Noto.
So that more than $100 million in losses from just two businesses annualized is also an opportunity if we need to go down that path as well.
Windbreaker. They can loan. Guys,
Our next question comes from Ashwin Shirvaikar of Citigroup. Please go ahead.
Another very intelligent guy. Let's listen.
Thank you, and congratulations on the quarter. I want to ask about member growth, and this is, I think, the first time in a very long time that we've seen a re-acceleration in member growth. Wanted to get down into what's driving that. Was that driven by particular member product combinations? Should we expect a sustenance of maybe a slightly higher level of member growth now? Any commentary there?
Great question.
Yeah, we had a really strong quarter in member growth as well as product growth. We set a record in member growth at over 700,000 and a record in product growth with more than 1 million for the first time. I mentioned on last quarter's call that we're starting to see, and we're continuing to see this quarter, the compounding effects of everything working together across marketing and product, as well as the experience and satisfaction word of mouth. We've been focused on driving unaided brand awareness because it makes the rest of our marketing more efficient. As that goes up, our performance marketing has better performance and it's much more efficient. The second thing is, as you scale your data and information, you're hopeful that you can increase marketing and maintain those levels of efficiency. And I'd say that's been the biggest shift this year, is that our marketing efficiencies have maintained as we spent more money. But clearly we're spending more dollars, but we're getting greater yield from what we're spending, and that's also a factor. But the team's just done a great job of allocating 25% of our marketing to brand building, which drives unaided brand awareness, and efficiently spending the other 75% against performance marketing. And then cross-buying continues to be very positive, reinforcing our overall one-stop shop mentality. In terms of the outlook for member growth and product growth, what I'd say is we have largely been averaging in the 400,000 range for members. I wouldn't start assuming we're going to average over 600,000 or 700,000 today. I think you could start to focus on 500,000 plus members in a quarter and keep it with a 5 handle on it. And we'll see how the quarter goes and how we're doing overall. We've really been focused on driving to profitability, and as we go into 2024, we haven't set our plans yet, so I wouldn't set this at a new level. It was an extraordinary quarter. Can we repeat this quarter? Yes, but I wouldn't plan on it. So I'd keep the outlook for members in the 500,000 range for now.
The next question today comes from Jeff Adelson of Morgan Stanley. Please go ahead.
Hey, good morning. Thanks for taking my questions, guys. So I think just looking at the guidance for the full year, it looks like, 4Q 23, looks like you're looking for something like a 28% to 32% revenue growth exit rate for the year. Just thinking through next year, I know it's early still, but if rates stay where they are, these elevated levels, is that a good number to be thinking about for next year, or is there any reason it shouldn't stay where it is? And how should we be thinking about the different revenue components? Should we be seeing, continued strength in the NII, a little bit less in the fee income, maybe a little bit more in tech platform? And then, Chris, if I could just ask really quick on the $100 million of loans, I think you said you sold at 105.1. Is that an unhedged or a hedged number? And could you just maybe speak quickly to what those loans were? Were they more seasoned or more new originations? Thanks.
Thanks for the questions. The first thing I'd say is the opportunity we have to drive growth is significant. We can drive compounding growth for years, given how large these markets are and our low level of market share. What we choose to grow in 2024 will be a function of the environment as we get through the fourth quarter and where things sit in January. So we take an approach that we give full year guidance at the beginning of the year after we report Q4. So we'll do that again, and then we'll update you each quarter. So I don't want to dig into the details of 2024 because there's a lot left to be decided in 23 as well as in January. Clearly, the Fed has some tough decisions to make, and that could impact the year. So I don't want to make any assumptions on where rates are, especially using a scenario where they're flat versus where they could be up 25 or even 50 basis points as we start the new year. But suffice it to say, the growth opportunities in front of us are quite significant, and we can use a lot of different levers to drive that growth. The one thing I will say as we look into 2024, to reiterate what I said earlier, 67% of the growth in absolute dollars in revenue year over year were from non-lending businesses. As you go into 2024, you should assume that personal loans and student loans will be additive to growth, not the drivers of growth. Our technology platform business and our financial services segment business will be the drivers of growth, and we'll supplement that on the lending side. In addition to that, we're committed to GAAP profitability in the fourth quarter of 2023 and for the full year of 2024. So those are two guideposts to think about. And then the last thing I'd say is we're really focused on tangible book value growth. On the trailing 12-month basis in my remarks and in Chris's, we talked about driving over $170 million of tangible book value growth. We're just getting started there. So that's another pillar you could think about.
Yeah, and then Jeff, in terms of your question about the $100 million sale in Q4, that was at 105.1% on an unhedged basis. In terms of the actual pool of loans that we sold, we'll get into more details on loan sales in our next quarterly call, specifically as they relate to Q4. But what I would say is that it's generally reflective of the overall portfolio. This specific pool had slightly higher weighted average coupon than the average. But there were other offsetting inputs as well to it. So it's a blend, but we don't talk about the specific loan pools that we're selling.
The next question in the queue comes from Michael of Goldman Sachs. Your line is open.
Hey, good morning. I just have two questions, one for Anthony and one for Chris. First, Anthony, on just sales and marketing efficiency per new member, I wanted to follow up on our earlier question, which was just around that point. Anything you could tell us about in terms of how sales and marketing per new member is becoming more efficient? Do you see continued opportunities to drive efficiency and effectiveness there? And then for Chris, I wanted to ask about the discount rate changes for personal loans and student loans relative to last quarter. I think the PL discount rate went up by 50 basis points. Student loans went up by 40 basis points. Any color there in terms of that increase in the context of how benchmark rates have changed and any other key factors? Thank you.
On the sales and marketing side, there are many factors that are driving efficiency, but I'm going to just focus on the big macro factor. There are others that are much more detailed. Over the long term, as we drive unaided brand awareness higher, all the rest of the money that we spend will be more efficient. If people know the brand, if they trust the brand, and we're a household brand name, the promotions we do will have a higher click-through rate. The conversion that we have to new customers and new products will also have a greater efficiency. And so as we scale the business and scale the unaided brand awareness, those would be the two macro drivers. There are many other factors in there tied to data and channels and additional technologies like artificial intelligence and other algorithms that we have, and for retargeting, et cetera. But the biggest factor is going to be unaided brand awareness and the scale that we have.
And then in terms of the underlying inputs of our marks and the discount rate moves specifically, I'll hit on both PL and SLR and some of the movements there. So in Q3, the fair market value mark on our PL loans decreased from 104.1% to 104.0%, so it's down 10 basis points. That was a function of the discount rate increasing by 50 basis points. Embedded in that discount rate assumption was that benchmark rates increased 17 basis points. That's a 2-year swap. And then spread assumptions widened by about 33 basis points. And then we had CPRs increasing, and collectively those were offset by a 20 basis point increase in the weighted average coupon. The one thing that's important to note in the personal loans business is that our actual CDR rates realized in Q3 were 3.44% versus an assumed 4.6% embedded in the marks. So that means what we're actually observing in terms of losses are about 116 basis points per year or 175 basis points over the life of the loan, below what is actually embedded in the 104.0% mark. And then within SLR, the fair market value mark of our student loans decreased from 101.9% to 101.4%. That was down 50 basis points. And that was a function of the discount rate increasing by 40 basis points. Our benchmark rates increased by about 35 basis points, and then spread assumptions widened slightly. This was offset by a 30 basis point increase in WAC, and prepayment rates ended up decreasing by about 10 basis points.
Next in the queue, we have a question from Dominic Gabriel of Oppenheimer. Please go ahead.
Hey, good morning. Thanks so much for taking my question. I was just curious about, if the environment stays roughly the way it is today for demand for your products, on the origination side in particular, how should we be thinking about the current level of personal loans versus the current level of student loans? And I only ask because given where the quarter went, it feels like you could actually see an acceleration of revenue growth next year. And so I was just curious how you're feeling about, the demand for your products and the current level and market penetration rate that you have in these products. Thanks so much.
Thanks. I can appreciate your enthusiasm. And if we wanted to accelerate revenue growth for next year, we absolutely could, given how low our market share is in all these different businesses. But under this scenario where you have higher for longer, I think we all need to be realistic of what that means for the industry. The demand for our products and higher for longer, as you mentioned, will continue to be robust, and the opportunity for us to capture that will also be very strong. But we can't just think about SoFi. We also have to think about the other market participants. I do think higher for longer will absolutely put pressure on other financial companies that, unlike SoFi, are not benefiting from growing deposits and that face notable interest rate risk because they either don't hedge or they lack the ability to pass on higher rates the way that we are able to. And those are two really important points. It allows us to manage our assets and liabilities in real time and to do it at a micro level down to the loan level. Higher for longer could put pressure on these other financial companies, and in that environment, we would want to be a lot more conservative and actually see something like personal loans not grow very much at all and student loans grow marginally. And so as we think about higher for longer, we think about being very balanced, not because of the opportunity in front of us, but because of the turmoil that may happen around us. As I said earlier, think about personal loans and student loans being additive to growth and the tech platform and the financial services segments being the driver of growth. Those are low capital businesses, in fact, nearly capital free. They have also hit the point of profitability, which allows us to step on the gas to drive even more scale in them. We haven't talked about it yet on the call, but it was not an easy progress over the last 6 years in which we invested heavily in SoFi Money, SoFi Invest, SoFi Credit Card, SoFi Relay, our Lantern product, our At Work business, and a number of other businesses that are in that financial services segment. For it to go from a loss of over $50 million a year ago to a positive profit on a contribution basis of $3 million this year gives us license to grow that in a much bigger way because we don't absorb losses the way we were previously. We're still losing quite a bit of money and invest in credit card given their investment modes, but we can really step on the gas and on the other products to drive great scale and profitability there. So it's a great option for us to have. But higher for longer may not be the scenario for next year. But if you actually believe that's the scenario, we're going to be conservative. We're still going to have really strong growth, but we'll be very balanced, especially on the origination side.
Thank you. Our final question today comes from Vincent Caintic of Stephens. Please go ahead.
Hi, good morning. Thanks for taking my questions. And it's great to hear the positive reiteration of positive GAAP net income in the fourth quarter. Just wondering, when we look forward on that trend, and you've talked about revenues accelerating, increased efficiencies of the business. So should we expect the profitability of the business to actually continue to accelerate from here, or are there investments or something else that you'd like to make in the meantime, and how we should anticipate that profitability? Thank you.
Yeah, obviously in the fourth quarter, we're expecting the profitability to increase since we go from not generating positive GAAP earnings to generating positive GAAP earnings for the first time. We're committed to generating positive GAAP earnings for all of 2024. We're still in investment mode, but we have to balance growth versus investment. I would think about what we talked about earlier this year from an investment standpoint, that will focus on 30% incremental EBITDA margins and 20% incremental GAAP net income margins as a guiding factor in how much will drop to the bottom line versus reinvest in the business. Obviously, this year, we've been well ahead of the 30% incremental EBITDA margin while still maintaining growth. In fact, what I'd say is I can't find another company that's driven the level of consistent growth that we have in revenue, as well as our member base and product base, while driving such significant improvement in profitability and building a high-quality deposit and funding base and diversifying it, in addition to growing tangible book value by the level that I mentioned. We'll continue to make sure that we balance growth versus profitability next year, and we're committed to GAAP profitability for the full year in that 30% incremental EBITDA margin and 20% GAAP net income margin at a minimum.
When my channel takes off, you can quit your job and I'll hire you.
Thank you. We have no further questions in the queue, so I'll turn the call back over to Anthony Noto for any closing remarks.
Thank you for your questions. I want to end with the following outlook. I remain confident that no company is better positioned than SoFi to be the winner that takes most in the digital transformation of financial services. Building the technology capabilities to offer our complete suite of financial products all on your mobile phone and to support our scale of over 10 million products and over $2 billion in run rate annual revenue has proven to be a daunting challenge. A daunting challenge not just for the most well-equipped incumbent banks and financial institutions, but also for the most innovative entrepreneurs. Add to that the regulatory requirements and sizable financial capital and resources required, and it's fair to conclude SoFi is in a class of one. I could not be prouder of our SoFi team for getting us to this point, and thankful to our more than 7 million members whose lives we impact every day. Thank you for your time, and I look forward to addressing you again next quarter.
Talking about, guys.
This concludes today's call. Thank you for joining. You may now disconnect your line.
Okay, guys, that's the end of the earnings call. So, guys, amazing call. Note, if you were able to hear Noto's comments there at the end, that's really the key. That's why I am so confident as a SoFi investor. He's talking about how hard it is to build a SoFi, how much capital, the regulatory. It is not easy. Like, it's not as easy as people think to just, they're like, oh, anybody can build this. It's just a bank. Bullshit. And they're talking about how much investment they made in Galileo, how the years, how that's just starting to pay off, and how they're, we're going to reap rewards for years to come on that investment. Eric Landis, hit the like button, you freaking turds. I never ask you guys. Like, I don't care. You don't have to subscribe. You don't have to like. I don't give a fuck. I appreciate those of you who do, but again, I don't monetize this channel, so makes absolutely no difference to me if you do something for the YouTube algorithm or not. I really don't care. If you enjoy the channel, watch the channel. Leave me a comment saying you enjoy the channel, and if enough people do enjoy the channel, I will keep trying to make videos, keep trying to do lives. Obviously, this is the Q3 If you're just joining us, guys, hello and welcome. Welcome and hello. Perhaps you are a normal human being on the East Coast, guys. I woke up at 3 a.m. To get down here and get this live stream. I actually was shooting for 4:45 a.m. I think I started 15 minutes early because I was going over the numbers, and I just got so excited. I got so excited. I couldn't help it. I wanted to see you guys. I wanted to say, hey, guys, look at this. Look at this. We were right. We were right. And so, it's like, God, and they can still go after the stock, guys. But the good part is the whole market is just, the futures are green. Everything looks green. Um, so this isn't, it doesn't look, now, of course, that can reverse, guys. This can be a bull trap, but it doesn't look like one of those days that the overall market is going to drag down SoFi and kind of, it's happens so often, guys, on days like SoFi puts out good news or something should happen. Just whatever forces just conspire against me. The manipulators, the manipulation. Wah, wah, wah. Call the ambulance. Bunch of babies. It's not manipulation. Computer trading is not manipulation. I mean, they're very efficient. But they can't hurt you if you don't trade in and out like a hamster on crack. If you don't panic sell low and buy FOMO high. Like, guys, be careful where you come in. Like, it's a good quarter, guys. It's a great quarter. Yes, absolutely, Jay Nelson. That's the key. The execution risk, I think, is all but gone in terms of management being able to do whatever they want. I mean, the COVID pivot was, do you guys remember in that Tom Hanks movie where they went to outer space, and the rocket blew up, Apollo 13, I think it is, and they gave the engineers like a box of parts, and there's these like aerospace engineers. They're like all in, like Clint Howard is there as one of the guys, as he always is in Ron Howard directed films. But they just gave these guys, they're like, this is what we have. Here's your filter. And then the other guy, like the manufacturer of the LEM, is like the landing module. He's like, is the LEM? He's like, it might not survive re-entry. Like, I can't be held responsible. He's like, we know. Stop hedging. We're trying to get these guys home alive. But not since they crafted a square filter that fit in a round hole and was able to reduce those CO2 levels just enough, so that crew could get home safely and splash down in the ocean alive. Not since that time has a more extraordinary feat been achieved by a group of managers or engineers or executives than SoFi Technologies Incorporated, of course, ticker symbol SOFI, bitches. Not since that miraculous performance by that group of talented, dedicated engineers, of course, led by the great Ed Harris. Ed Harris, one of the most underrated actors of all time. I mean, just his performance in Glengarry Glen Ross is a thing of absolute beauty. I mean, but the guy's just such a good actor. Anyway, I mean, what this management team has been able to do, from COVID taking the company from a student loan company to where we are today, to this absolute breakneck speed of growth of deposits, almost $3 billion in deposits. I was almost right. Un poco more deposits. Why couldn't you Turd save a little bit more? Raise my credibility, bitches. But guys, we're up 10%. What an extraordinary, I have never heard Noto more confident. And this is what I mean by take the gloves off. I've been asking for this, guys. A less conservative Noto, less hedging. He's like, they basically assured us of GAAP net profitability. And guys, the last 2 quarters, I mean, what is that? We've got 7 and 600,000, basically 1.3 million new members in the half. I mean, we're going to be adding 1 million members a quarter before long. This thing is going to build on itself. It's going to reach critical mass. We're making profits off high interest like a bank. We're bringing in customers like crazy, and we can easily afford to pay them these higher rates because we don't have any of the legacy costs. The whole business model. Then you start talking about Galileo. I mean, I honestly have a semi thinking about Galileo and these RFPs, and like, they can't say, hey, we're going to land these accounts. It just takes a few quarters. But they're basically saying, hey, we're going to land these accounts. It just takes a few quarters. Guys, if they start, if they own the tech stack for major banks, like, think about it, guys. Who's that? Somebody's gonna buy this company out at like $30 a share, you punk ass bitches. God, I hate these fucking bears. They don't see what's right in front of them. It's like, and was in Tesla early. I mean, but people get this mania one way or the other. It's like, oh, it's magic. They're going to rule the entire world. The robots are going to take over everything. And other people are like, the company's worthless. It's going to zero. And then like, guys, take the extremes off the data set. Like, this company is not super hard to understand, and it's rock solid. I mean, their management is like, is there a grade higher than A plus? Could they set the curve 100% AP? Like, you take that AP class and your 4 becomes a 5, just inflates the GPA. Mostly works for white and Asian kids. That's what the test scores indicate. But it's funny, like this whole thing about like standardized tests, like Florida's going to stop doing AP this, and like they're warring because it's not like religious enough. And then California, we don't want the test standards because it's like racially biased. And it's like, man, everything's gone insane. But I digress, guys. Anyway, what's going on? It's sort of reaching that sticking point of 10% pre-market. So let's see where the options are actually, guys. Okay, so they have Max Payne right now at $7. Oh, this isn't updated. This is not updated. Let's see if we can take a little look-see at the options chain. And you'll note, guys, like I was trying to mansplain to you. So we're right back in this channel. We never broke support. This was all borrowing, guys, and these shorts are just fucked. Like, how do you short from this? 3 billion in deposit growth in this environment where savings rates are going to shit. And one of the most critical things Noto talked about was like, it's not like economics that dictates our growth. We're taking market share from big banks because we're better than them. That's basically what Noto was saying. Yeah, I'd vote for him. Yep. Me too, Joy Luna. Absolutely. Welcome and hello, Joy Luna. When can we see 15? I mean, 15 I think could be achievable in one more quarter because, guys, what if next quarter, I mean, with football and everything going on, what if next quarter, I don't think it's inconceivable that we could reach 1 million member ads next quarter. That's just my opinion. But people were like, oh, it's going to be 2.2 billion. I said 3.6, but that was honestly a little bit in jest. Not totally, but I was hoping for 3 billion in deposit growth, basically. And we're, 2.9. So very, very close, guys. I split my lip. It's painful. Mouth's dry. I get up so early. It's freaking freezing coming down here. My office is at the ocean. Oh, it's horrible. I have to come down here and broadcast to you turds. But thanks, guys, for joining me. I think there's 65 people here. Wow, that's a lot. So I appreciate you guys for being here. What are your thoughts? Somebody talk to me. If there's that many people here, why aren't you idiots saying anything? Business model proved. Totally agree with that. It's already been beat down. Absolutely. Headed to 15 the next quarter. I think if we get another quarter like this and a solid gap net profit, huge deposit growth, huge member growth, the wheel's starting to work. Galileo actually is able to announce like a big contract. The stock can easily go to 15. Guys, remember the best analysts. I mean, people think it's out of reach. The best analysts already have it at 16, 15. I mean, even the bears are, up at the $10 and $12 level, the credible bears. I mean, yeah, you have guys like the Chia Pet who are still at $3 in the fucking forehead, the bologna sandwich, you're $5 in the sell. You have unknown analysts at UBS, you and us, UBS. Yeah, it's BS, fucking bullshit. That's what UBS stands for, $7 in a hold by the unknown analyst, but still, where it closed Friday, it still had 1.89% upside. But nobody wants to put their name on this garbage, these garbage calls. I mean, I don't know, guys. I mean, to have a $7 target on this price, like what are you pricing in? Execution risk? The business model as who was just saying that? Let's see. Somebody was just saying business model proven. I think was it Hybrid Duncan? Um, anyway, Jay Nelson. Anyway, guys, sorry, I'm very, very tired. Did not get that much sleep. I got up again at 3 a.m. to service you turds. But anyway, that's not as gay as it sounds. But in any case, guys, yeah, business model's proven. So what are the bears pricing in at this point? That the business isn't going to keep. I said it's going to grow 30% next year, not 25, not 21. 30%. And I think I'm being conservative, and I think they can grow 30% every year for the next 5 years quite easily. And they absolutely decimate all these analyst projections, for not only EPS, but for growth. And the reason is exactly what Noto's talking about. It's like we're taking shares from the banks. It's not like a cyclical thing. It's not just student loans. It's everything. They give people a far better deal. I mean, whether you're getting 0 from them or 4.6, I think people are going to realize even when rates come down, like SoFi is able to pay 3 to when the banks are still paying 0, it's still better. People don't realize they've been robbed for years. The 0 interest rates, the fees, the points, the originations, the ATM fees. Oh, used someone else's ATM here. Let's charge you $6. Oh, here you overdrafted your account by $1. We don't want to help you. We don't want to help you manage your money better. We don't want to educate you. We're just going to charge you $100 in fees. How does that help somebody who's absolutely broke? What does that do for your customer? What does that say about you as a business? That basically your goal is to like sign up people who are on the margin, barely getting by, and then just absolutely decimate them with fees and, basically hammer them in the nutsack every chance you get. Take a sledgehammer to the old Apple bag, for your customers. That's customer service. That's why people are switching to SoFi, and that's what Noto's talking about. Like it's only accelerating, guys. The statistics bear this out. You have to look at Steven on not future what's that, SoFi Weekly. He tracks the deposit inflows and outflows from like 100 banks, and they go over it, and it's like SoFi is just dominating the space, just absolutely dominating. So let's see where we are, guys. We're still up 10.5% or 72 cents. Let's see where the fight is going to be, guys, in terms of the options, because I know there was a lot of 650 options at 650 on the puts. Yeah, still a lot of a lot of $5 puts. Jesus. 550, excuse me, and even 5. Yeah, I don't like the look of that. What about the calls? Yeah, could just be hedging. I mean, a ton of $8 calls, 750 calls, a lot of $9 calls. Whew, God. This is prime to really violently move up and down or down and up. This is really, really a powder keg, guys. God. Whew. When you're a fat middle-aged gentleman with no hedge and just tens of thousands of shares and many, many options, and just I got a lot on the line here, guys, on this ER, and I really pushed all my chips in last week when they attacked the stock of 782, 783, or I mean 682, 683, 720 was also buying a lot of calls, so and a lot of leaps. So man, I breathed a sigh of relief when I saw this ER, but like these puts are not making me feel that great. Yeah, a lot of volume on the put side. I don't know when they're calculating this when the last time, or if this calculates in real time. Oh God. Just look at that put. Look at that fucking put volume. That open interest, excuse me. Wow. That's just ugly. Let's see. Created 10:30. Yeah, so this was just created 16 minutes ago. So yeah, this is accurate. Let's see where max pain is actually. They just round it off, but let's see where it actually is on a cash basis. So yeah, so it's a lot. It's under 7 actually is probably going to be max pain. There's a lot of puts to the low side. Can you guys who really understand options really, really well tell me what we're seeing here? Because I mean, just to me, this looks like the bears and the shorts were wrong, and they're digging even deeper with options. Or is this longs hedging? Like, what's going on here, guys? What do you think? Shout at me in the comments. Still up 73 cents, just like that 10.5 point level. But that's really, really strong, guys. Really, really strong move in the pre-market, and I think it's just going to increase because a lot of people can't buy pre-market, or they have to move money or whatever the case may be. And I think institutions are seeing the writing on the wall. Like Noto and LaPointe basically came out and said, like, this is, I love that Guns N' Roses out of the background. Guns N' Roses, where the hell are they playing? Hollywood Bowl. Anyway, I can't imagine they're in that great a shape to play, but who knows? Haven't seen them lately. Saw a couple good shows back when I was a young pup. But guys, where do you think this thing's going to open? We got 12 minutes till the market actually opens. Man, I don't know. It's really hard to say. I don't want it to gap up too far because I want some buyers to come in. Where do you think volume's going to be? What do you think's going to happen today, guys? It's really hard to say because the options are telling me they're loaded, to dump the stock at least sometime this week, but this ER is telling me that's not going to be possible. And, you know, everybody and their brother's going to want to be buying this stock because fintechs have been hit. Like, I mean, what was it? A firm the other day got a downgrade and went down like 20% or something. I mean, I don't see how you downgrade on the back of this ER. I don't see where the big weakness is. There's a couple of red flags, and we'll go over the numbers. I'm going to read, the actual numbers when I've had a chance to get some sleep and digest it, and then, I'll make another video kind of going over my thoughts on the actual ER. But from what I'm hearing from management, the guidance, the EBITDA guidance just continues to like blow me away, like how fast that EBITDA is increasing, and as they scale, what that's going to mean to net profit. And they're talking about how much of the incremental EBITDA margins are going to the bottom line in terms of net profit. It's what was it, 48%? Jesus. Let's see. Yeah. Well, what are you guys talking about? I can't follow. My eyes are tired, guys. Let's see. Klaus Baum is here. Klaus, good to see you. Yeah, I picked up shares at 682 as well. Let's see who's here, guys. What idiot has to sell? Yeah, I mean, yeah. He shifted to neutral. Bullshit. 755 is going to be a fight, Duncan. You're right. Analysts, yeah, absolutely. They're scorned lovers, Bobby Joe. Rock 4426. Thank you. You're very welcome, sir. Thanks for joining me. No dump run up to EOR last week. Yeah, I mean, it's still impossible to say, guys. They can still attack the stock. It just takes money. I mean, they can still kill the momentum, but I don't know, guys. There's so many eyes on the stock. Like, I think retail is going to be snapping this up with both hands. People have, I just think people have money in their pockets. Like, SoFi customers are saving. I think a lot of SoFi customers are going to be buying the stock. I think institutions see that management's 100% confident in net profit next quarter. They're going to, why wait to buy at, 12 if you're an institution when you could buy today at 8 or, 775? Just doesn't, my institutions were buying this back. Institutions were buying at 12. Noto was buying at 13. Like, this thing is still on a huge sale, but it's just not going to be for long. This ER really, really goes a huge way to proving the assertions that, management has been making and the business model has been espousing. It's really good to see some growth on the technology side back above our highest level of customers. And they're talking about how these RFPs are going well. They're not able to say, who the people they're talking to are. I think once the deals are actually struck, and I think some will be, they'll be able to say more. But guys, market opens in 8 hot minutes. I'm going to go do 8-minute EABs. I only have 8 minutes to work out, so we give you just as good a workout as the 7-minute folk. Well, how do you guarantee that? Well, if you don't like it, we'll give you this 7th minute for free. Whatever that was, and something about Mary. God, that was a great character. Oh, no, that's not the ticket. Like, step into my office. Like, why? Because you're fucking fired. I forget that comic's name. He was also in, I believe, Periscope Down with Kelsey Grammer. I think that might have been his biggest role. Analysts have bearish calls because they're turds, Bobby Joe. They're gutless turds with tiny wings, and they're just not up to the challenge. They don't have the minerals to make an honest call. Carl Seamark, yep. Thanks for not working, Carl. We appreciate it. You're helping the economy all in. What's up, Klaus? Again, bought shares low, as Klaus will, being the intelligent man he is. Yeah, I've been on for almost 2 hours, guys. I got to get off. I'm going to lose my voice. Most of the time, I wasn't really talking that much for me, but I just want to see where the market opens. And guys, I'll probably live stream for like the first 15 minutes of the market and then let you guys go and hand you off to some other less able turd for their live stream. But yes, my voice is growing tired and weary, and I probably will go home and go back to sleep for a little while. Or not, because I have had too much coffee already. So maybe I'll just have more coffee. $30 by 625. Wow, that's a big prediction. Flywheel is turning, Tom. That's very true. My Polish friend, or I don't know how to pronounce that. Chanowski. Damn Chanowski. How you doing, good sir? Not a lurker anymore. 101, no wait for 103, watching, no wait. Oh, how many people are watching? 109 or 70? Yeah, 109. Welcome and hello, and welcome. Thank you, Eric. Appreciate it, brother. Guys, thank you. This channel is just for fun. Like I said, I monetize this channel. I could, but I have other jobs that make me money, and I don't want you guys to get a bunch of stupid ads. So it's just a way I enjoy this, a way for me to blow off steam. I do watch stocks anyway, so I'm just like anybody else. Don't know anything special. Not any type of special investor. I just try to like take all the emotion and nonsense out of it, look at the actual numbers, and buy low and sell high, and it's just that easy. And this market can make you wealthy. Um, you just have to identify your bad habits and stop doing it. You might be calling yourself a hey, what's up? What's up, Tyler? Yeah, huge beat, man. Huge beat. Tyler Self in the house. I'm streaming. Tyler's streaming, guys. Check out Tyler's stream if you're sick of me. I can totally understand. He does really great live streams also. Thanks for popping in, Tyler. I appreciate it. The Catfish with a K. Check out his channel and subscribe also. Tyler's a good dude. He also does funny like acoustic guitar songs that he writes, and he does covers, and he does live streams, and he speaks like Creole. He's from Haiti. Guy's like a mystery wrapped in a riddle. It's got a lot more than meets the eye when you're talking about the Catfish. With me, there's less than meets the eye. This guy looks kind of deep. Like, no, give me in a donut. Appreciate it, Tyler. Thanks a lot, man. Hybrid Duncan, Six Kings. Hello and welcome. Welcome and hello, Six Kings. I do remember the movie Three Kings with George Clooney and Ice Cube, I believe. Maybe Mark Wahlberg, I'm sure, was in that turd. Like running around, I think, Iraq, stealing gold. But then they ended up like helping the villagers. Like classic Clooney. Just classic Clooney. Um, Keeping it classy. Sailing cheese. Dude, you sailors have money. Come on, guys. Let's be honest. Let's all have a party on Sailing Cheese's boat. I christen thee the Flying Wasp. Oh man, I love Caddyshack. Like Judge Smales. Increase. Hey, it's like your boat scratched my dinghy. Rodney Dangerfield was so good. Increase the mic volume. Yes, I will. I should probably just talk louder. Let's see. Let's get a level check, guys. Level check. I think I'm clipping. I think because now I started talking louder. Now I'm clipping. Now I'm talking louder. I don't know, guys. Kind of shift around. I just need the mic like a little bit closer. So yeah, I'll do that. Yeah, dude, we should hit up a live stream together sometime, Tyler. I gotta learn to use that. I was Tanner from Future Investing was nice enough to have me on. He showed me like the streaming software he uses. It's pretty simple. You'd have to pay like a small monthly fee, but you can have other guests on, and you can switch back and forth and share the screen. So pretty cool. But I'd have to learn to use it, and I am not any type of technical genius, unlike the great Ice Cube and George Clooney. Ice Cube does the same acting every role. I like, he's pretty good, but it's like the same deal, man. It's not extreme. Like I don't think it's like method acting or anything. Yeah, it is a nice quarter. Yes, I'm losing my voice. I've been on here forever. I didn't get any sleep. Turn up your volume. Turn my headphones up. Turn them up. Turn that shit up. If you guys haven't heard Fisticuffs, turn my headphones up. Go out and get that joint. Like we stabbing people, we killing people. Anyway, guys, it's still that 760 level. Market opens in 2 minutes, guys. Put on a new Depends and put on your, hold on to them hats and glasses. SoFi just announced with partner. Yeah, exactly, Tyler. Yeah, that was in the earnings call, brother. And they had another 2 billion. I forget the term you use, but a future buying agreement basically for their loans. No money, cheap boat. It's okay, man. At least you're sailing. I used to sail years ago. I used to do some sailing out of Long Beach, and it was so fun. And I got out of the habit, and I wish I could get the time and because right where my office is, there's all the boats, and I always wish I had a boat. And I know it's like a money pit, and it's expensive, and people say you don't use it, but I always, always wanted a boat, and I'm gonna get me one here, bigger one here, very soon. I don't know. I want like I don't know, 36-foot boat, something two bedrooms and then or staterooms, should I say. And something you could go out to Catalina and just spend the weekend or, anchor off of Malibu and spend the weekend. That would be nice. I know it's a rich man's sport. I'm not a wealthy guy. Like I've done pretty well in the markets, but I do have bills to pay like everybody else. So that is why I'm up working early, guys. Market's going to open up in 1 minute. Yeah, I'd love to go sailing if anybody, like, I don't really know how to sail anymore. I kind of did at one point, but I'd have to learn again. But I'm a pretty smart guy, so I don't think it would be that difficult. But yeah, Tyler, thanks for dropping by, man. I'll try to drop in on your stream later. I know Tyler does marathon streams. I'm not used to this. That guy has endurance. He does this in his sleep. But yeah, guys, thanks a lot. Yeah, Hunter Marines. Yeah, I used to sail on a Catalina, 36-foot Catalina. We used to do like, low level like racing. Guys, market's open. Let's see what's going on here. Let's see if this thing moves. I'm going to get some more water, guys. I'll be right back. Let's see what the market does. Yo, guys, looks like up 65 cents. What's up, Carlos? Hey, Sailor. Let's see, guys. What's happening? Okay, 11 million. So obviously volume is very, very hot. Usually here's where the algo tries to dump. Shoots up for a few minutes and the algo tries to dump here. Obviously not working, moving up 80 cents. I think shorts might be covering on the back of that ER up to 12 million shares traded. So it opened at 707, supposedly. Wait, no, that's not true. I think that's old data from yesterday. What does the order book look like? So last wall is sort of at 780, but it's getting bought up. God, it's moving around, guys. SoFi and BlackRock, that's just great news at a premium too. So, oof, guys, this is like I said, the stock is dramatically undervalued. So 20% move. This is, like I said last time, 20% move sell. Like with these numbers, 20% move just kind of gets us. Remember, everything from 825, guys, was bullshit shorting and borrowing. That whole move from 825 down to 680 or whatever, it was all borrowing, guys. These guys have their noses wide open. The shorts are screwed. They have to cover. Their whole thesis is like that SoFi needs to borrow money, that SoFi can't sell loans, that all of SoFi's customers are going to default. It's all debunked. It's all bullshit. And it always has been. It was just a manufactured narrative. That's why we're going up, guys. The stock should go up at least 20% today. I mean, that would just put it back at like that 825 level where it should have been. I mean, come on, it came into the last earnings at 950 and then it sells off on what basis? Like, it's based on fiction. The numbers continue to prove that the short narrative and the bear narrative and all these guys are just full of shit. And they're just, I always say this, I'm like, the SoFi bulls cite data, statistics, they make graphs, they make spreadsheets, and the bears always have these vague possibilities. They're like, if the continues to weakness, and if they continue to get defaults, and if the defaults grow exponentially, and if, Anthony Noto, whatever, it's always bullshit. Like, that's how you know which side is full of shit. The bears are full of shit, and it's just so obvious. So obvious by this ER, guys. Yeah, they're scaling out. They're jumping out the window. Yeah, 15 million. Buy, not advice. Buy SoFi, not advice. Curious what the rest of the market's doing. Yeah, so the Nasdaq's up nicely. So there's not a red day on the market. It's not like a banger day, but it's 1%. So the market is not dragging SoFi down today, guys, which is great. It's just letting it run, letting it open up. Let's see if there's any short data yet. I doubt there will be because the market just opened, but sometimes something reads out pretty quick. Yeah, they returned, nobody borrowed any shares so far, and they returned, they don't have a cost to borrow up yet, but they returned 100,000 so far. That's probably just like some pre-market measurement, but yeah, guys, the days to cover are way up. Utilization was way up. The shorts dug in deeper, I think, assuming that the numbers were going to look bad, and they're just wrong. Like, it's just, I don't know how else to say it, guys. When you short a stock, usually you're supposed to have some argument why the company is doing poorly. There's some type of, problem with the business model. Here, shorts arguments are just pure made up nonsense because SoFi is killing their bosses. And, the stock should at least go back over 825. I mean, it really should go back over 950 where it started at the last pump and dump for the last ER. So, guys, I wouldn't sell necessarily today on a 20% move. I would have last quarter because we started at, 950 instead of 7. But this ER is an absolute blowout. The stock is up almost 14% on the day. And guys, it should be a wild, wild day. There's 18 million shares traded. Again, the short thesis has just been completely debunked, whether they like it or not. Management all but said that they're almost assuring net profit. If you look at the upward guidance for EBITDA, it's just crazy, from like a high side of 330 to I think it was 380 or something. It was a huge guidance raise there. So that's something people haven't even got their claws into just yet. But man, the stock looks. Let's just take a look at the chart and just see where the stock is in terms of my little channel that we had. Yeah, you see a huge, what I like about this, guys, is it wasn't like a huge gap up. You see this gap here. This doesn't usually end well. So the fact that there's not a huge gap up here and then its stock is going to go up organically, with buyers coming into the stock and shorts covering, that's what you want to see, not some one-time just crazy, pump, which leads to a dump. Like I said, guys, the pump started here, from 950 to 1050 and then pumped to 11, whatever it was, 1170 or something. Guys, they started us down here at 7. I mean, this serves them right. Like, the shorts should be getting killed right now. Remember, they were shorting 720, 730, 740. They were shorting the hell out of it, and their options, the puts suggest, they really thought SoFi was going to turn in a poor ER, and the opposite happened. So the shorts should get punished. Now, whether they're willing to just pump a ton of money in here to try to slow this down and try to reshort, I think it'd be extraordinarily foolish to throw more money at this short when, they're going to be making money next year, guys. I mean, I don't understand shorting this stock. This is not a firm. This is not, some third-rate, two-bit SPAC company. This company is legit, guys. This is going to be a legit huge bank, a huge tech company. This market cap of $7 billion is peanuts compared to what this company is not only going to be, but already is. I mean, look at the margins. The margins are very, very healthy. They're going to be shooting for 20% at the bottom line. And as they grow and grow at this rate, I mean, they destroyed their earnings. Like, the street was looking for an 8-cent loss. I mean, usually they don't beat on EPS by very much. But 3 cents, guys, that net profit next quarter is a sure thing. They sounded sure. They didn't hedge at all. And I've heard them say, like, yeah, we're projecting this, but a couple times a point is like, we're going to make a net profit. Like, they didn't seem concerned at all. Yeah, I've been streaming forever, guys. I got to get out of this live stream unless anybody wants to talk about something. Is doing very well. Yeah, thanks, Tiff. I do know that the company doing very well is important. Yes. Hello, Tiff. Yeah, guys. So, okay, pulling back a little bit here. Yeah, and again, this is the algo doing the algo. Like, it's always attacks here, but I don't think this is gonna work, guys. Short and borrow here at your own peril. I mean, they have to with those puts. Like, are they gonna? I guess maybe they're gonna just try to hold on 750 calls. I mean, I don't think they're gonna be able to push this back to $7. I just incredibly stupid, guys. There's a lot of shares trading hands, like 10 million per tick, 20 million per tick. I mean, we're up to 22 million shares already, guys. This is moving. Like, this is a fight right here. I think Hybrid Duncan said it. They're going to fight at 760. He was right. But the Bears are going to lose. Unless I don't see why they want to keep throwing money at this short. I don't see what they're shorting. I know, Tiff. I'm just messing with you. Can't wait to listen to the return tonight. And he's on the second cup of coffee. Yeah, I need another cup of coffee, guys, or I need to go back to sleep. Yeah, so they're really working those. I think it's got to be $7 calls. I think there's got to be a ton of them, or a 750 calls, excuse me. And frankly, I own a lot of those calls, but not a whole hell of a lot short term. But I did buy some. So, guys, I don't have a hell of a lot more to say that hasn't been said. The earnings was a massive beat. Nodo and LaPointe sounded extremely confident. They did sound like they maybe need a little bit more sleep, but analysts, even bearish analysts, were asking some, Oppenheimer, Dominic Gabriel, who, he's a very smart guy. I give the guy the business because he, was like, I got to put the brakes on this rally, but, and, I call him a chipmunk because he sounds like this, but, the guy's a really smart guy and he's a good analyst. So he asked a good question. Of course, you had Truist, Jeffries, Mizuho. They're always, And I think Noto answered the call. Like, he knows his numbers cold. The point knows his numbers cold. They have this thing dialed in. They can put whatever numbers they want. They balance guns and butter perfectly. They're balancing growth and a march toward profitability. They have to do that for the long-term health of the company, the growth, and for Wall Street and for us investors, they have to get us to profitability. So we don't jump out a window before this wheel strategy has a chance to work. Yeah, the short longs, yep, they will exactly do that. Like, they'll cover and then within their own house, and then they'll raise their targets to a more reasonable position. What's up, Beach Boy? How you doing? Yeah, guys. Yeah, let's rerun tonight, guys. I got to get off the live stream. Really appreciate you guys watching. They're pushing down on the stock. As one would kind of expect, this is where the algo kind of always pushes. You see that this is what I call the mountain and hump. They always push down here, but they're not going to be able to push it down that far. There's too many shares trading hands, guys, up to 25 million already. I know there's a lot of money in the options, but there's also a lot of money in trying to push this down. Like, I don't know. I don't think they're going to be able to sustain this because there's not a lot of ambiguity with this ER. Like, last quarter, there were some red flags, but defaults, charge-offs were just not that high, and they were below pre-COVID levels. They're below SoFi projections. So I think ultimately, guys, I don't know how much we go up today, but I don't think we're going to see a big sell-off or anything this week. I think we're going to stay above 7 quite easily. But I don't know. What do you guys think? Golden Hour, thanks for joining me, guys. I'm going to jump off the live stream. I might make another video later, but I kind of doubt it because I'm sort of losing my voice. But I appreciate you all joining me. Lee Armstrong, thank you, Lee. I really appreciate that. I want to thank everyone here for joining me. I hope I didn't miss anybody. Flesh infection. Yeah. Okay, I'll try to pump up the volume a little bit, guys. Thanks for watching Flesh Infection. Rock was here, Rock 44260. Has a Netflix deal. Yeah, don't make that same mistake you did with Netflix. Could have bought. Jan Peterson, thank you. Dr. Gonzo's here. Thank you. Smurfy Good Times. Or you guys were here at one point. Duran Kim, 24 Hours to Live. Tam Chanowski, my good buddy. Sorry, I just something about saying like those names. Always say it with like that George Wendt like accent from the Bears, and like I'm sure it's just a name. Like probably guy's probably my neighbor or something. But hope you don't take offense, guys. Not trying to offend anybody. I'm just tired and blabbering. Smurfy is here, guys. If anybody else is here, if I missed you, I do appreciate you watching. Thanks a lot. What's up, Firehouse Pete? Pete's the man, holding it down out in NYC, keeping all you turds safe out there in a turd-like world. What's up, J Mac? Thanks for joining me. Rock, they put a loss on the books. Yep, they did. They took a write down there. Back to 7, I add heavy. Yeah, you might, Roy, it's hard to say, man, but I don't see them being able to push this down on the back of this ER. Like, the stock's undervalued, guys. I mean, it's dramatically undervalued. Deposit growth matters more than anything. $3 billion in new deposits, guys. The members they're bringing in are doing direct deposit. The members they're bringing in have high incomes, high credit scores. This company is a pot of gold. Somebody should want to buy this company for $25 a share. What's up, C-Bar? C-Bar Engineering, CMB Ching. The man of many, the man wears many hats, but he engineered us an earnings beat today. Good to see you, C-Bar. I'm about to, jump off the live stream, guys. I've been streaming, I think, for like 75 hours. And I'm not Tyler Self. I'm not Catfish. I can't live stream for hours. I lose my voice, and I have to go talk to some of my contractors, guys. But again, it's Poco, Moss. My name's DannyDealz. Doofus Rufus, thanks for joining me. Yeah, market makers can push it anywhere they want. Absolutely, Roy. It's very true. Market makers have the money. Retail, they blow their load early. They don't have bankroll. So retail we can flap our gums, but we can't move stocks, guys. I mean, unless it's like some Wall Street bets thing where everybody, collectively, fixes the market, which is probably not legal technically, but Wall Street does it all the time. But I just think organically there's going to be too many buyers of the stock, institutional, on the back of this ER. Like, it might not be today, it might not be tomorrow, but over the next couple of weeks during this quarter, I think you're going to see a lot of institutional buying. So I don't really care, necessarily. Yeah, they're taking market share from Schwab. They're taking market share from everybody. But we need get a legitimate trading platform going, become a true one-stop shop, get business banking going, true business banking. I want to see that faster than management's planning. So like to see management be a little bit more aggressive, not only trying to take market share, expand products, expand growth. You didn't miss anything, C-Bar. It's been me rambling for like 3 hours. Don't worry about it. Yep, whales will start buying in the next months. You're absolutely right. Institutions are coming in. Don't worry too much about what happens today, guys. They can do whatever they want. They got a lot of puts to protect. They got all kinds of things. They got a lot of calls to fight against, but God, the ER was as good as we could have hoped for, guys. If you're a SoFi investor, you should be extremely happy and extremely confident with what management accomplished this quarter. It was nothing less than an absolute home run of an earnings report. And want to thank management. I want to thank all of you for watching my turd of a channel here. I want to thank myself for waking up at 3 a.m. to talk with you turds. Some would say that's very misguided. I should get more sleep. I need my health. Blah, blah, blah. Anyway, guys, no, seriously. Yeah, 107. Pete, they thought last, but it builds on itself now, Pete. Those members are adding more members. It's like we're reaching a critical mass, guys, and the stock is kind of trying to go up again here, push back through 750. Yeah, I'm extremely excited, Pete. Yeah, retail needs to hold strongly. Don't sell it. We were just at 825, guys, before they started borrowing. Like, it should at least go back through 825 without even breaking a sweat. Don't have such tiny balls. Hold your shares for a little bit. Make some real money. Like, even if you want to flip shares, don't sell under 10. Last ER, it pumped way over 11. This should easily pump over 9. I mean, just give it a little bit of time. Let these guys work out their bullshit. Let them dump their options on unsuspecting morons. 2.9 cents per share. Okay, that's what it was. Yeah, people have been saying 2. People have been saying 3. Retail investors, yes, they can, but it's very hard. It's very rare. Like, that's why they're hedging so much, Tiff. I'm sure you know. Like, that's why these options are spread out like they are, because I don't know, market makers are short long, they're very concerned. But the volume is slowing down here a little bit, kind of. But yeah, almost 30 million shares traded, up 50 cents on the day. It's pretty solid, guys. We don't need $2 today. I'd be happy 50, 60 cents is fine. 10% up is fine. But I think if we go up steadily over the next week, it's really going to help the stock from crashing. Give institutions time to come in at these lower prices, give them time to cover at these lower prices, and then boom, I think we see the stock continue to go up the rest of the week. The market is up very nicely, guys. Let's just take a quick glance, and then I'll get you back and just look at the short interest. Oh, UAW reached a deal with GM. Okay, that's going to be really good news for the economy, because that was a lot of workers not working, GM losing a lot of money. I know GM is in trouble in terms of EV and such, but they are an important, part of the U.S. economy, and they do employ quite a few people. Yes, slow up, steady. That's what we want. So anything else important going on? Right on the front page of Yahoo Finance, Yahoo, SoFi raises revenue outlook, ISQ for profit, stock jumps. That's good news. Of course, they are pushing down on the stock as much as they possibly can. Let's see where it went just now. So yeah, it's only up 6.77%. Should be up far more than that. I think they're trying to push down to cover, but in any case, guys, it looks like everything is green today. It kind of worries me because I think this could easily reverse, but big week of events, obviously Fed talking. I think Apple earnings come out. Yeah, Apple earnings, several other earnings come out. So we'll just have to see what happens, guys. But I like SoFi to be up 8%, 10% today, I think that would be excellent, and I think well deserved. So you guys have a great day. I appreciate you watching. It's un poco mas. It's DannyDealz. It's the Sofi Stock. It's October 30, 2023. It's 6:52 a.m. out here in Los Angeles. I've been talking to you guys forever. Thanks for watching. I appreciate it. I'll talk to you soon. Go SoFi. Ticker symbol SOFI. Not financial advice. Buy SoFi, you weak-kneed turds. You guys have a great day. Happy Monday.